Over the last 10 years, Rwanda has been recognized as 10th fastest growing economy in the world and has experienced one of the most exciting periods of economic growth and socio-economic progress in its history. The country's achievements in the last decade include an average real gross domestic product growth rate of 8.2%, as well as the upliftment of more than 1 million Rwandese out of poverty between 2006 and 2011.
We are focusing on developing the capital market in a way that has not been done before. Here we want to make sure that we can have it more active by trading on stock market, on bond market, so that even if we have the corporate bonds being traded there, we have developed the commodities exchange, which has started with agriculture, beans and maize, but also we are bringing all agriculture products, plus coffee, tea, pyrethrum, and minerals will be traded on that market, which is a regional market, not only for Rwanda, but also for the region. The capital market will have the capacity to raise money within the country, but also from the savers from outside.
Rwanda's positive performance has been driven by the expansion of its service sector, particularly communication and transport activities, which has grown by 19%. Economic growth, however, did slow down slightly in 2012 to 7.5%, and a decline in services growth too, particularly due to a decline in credit and to the private sector resulting from the tighter fiscal and monetary policies.
Macroeconomic stability has been tested several times. In the year 2009, when there was a financial crisis, we survived. No bank went under. In 2011, when there was Arab Spring, where the prices of fuel went up, our inflation only went up to 8.3%. That was the highest in December 2011. Last year, when you had a shock of the donors all of a sudden stopping or delaying the aid, our economy grew by 8%. This shows that actually our economy is becoming resilient. Our fiscal policies are working, our monetary policies are working in terms of containing those kind of shocks. So we believe that we have reached a maturity, we have a mature economy now, and now we are moving to a different level where we can continue to grow, reinforcing the macroeconomic stability, creating a very conducive environment, reinforcing peace and security, and also improving all the other governance areas, which are pillars for sustaining the economy.
As the world continues to struggle under the weight of the global economic crisis, increased efforts to earn more foreign exchange from exports of goods and services, as well as increasing domestic resource mobilization, is needed to generate the required resources for development. Rwanda's Finance Minister Claver Gatete recently presented his 1.65 billion Rwanda franc budget for this fiscal year 2013-2014. This year's overall budget was 103 billion Rwanda francs, higher than the 2012-2013 revised budget of 1.5 billion Rwanda francs.
Now we have covered 60.2% of the total budget is for domestically funded, and 39.8% is externally funded. And this is bilaterals and also multilaterals. But we are saying we need to do more. And what kind of instruments do we have in terms of doing more? And that's what I've been discussing. One, we have not been engaging the private sector much, because with more support of the private sector, they can afford now to invest. That means the private sector, meaning domestic private sector and external private sector. And that's why we are focusing on addressing issues of resources for the private sector, whether it's developing our capital market or increasing resources within the banking system.
Budget was generous on taxation, and when you look at the changes that have been suggested, it's quite, they are not many, but it rotates around investment code, which the minister emphasized or mentioned that it has to be revised, and by scrapping off some of the incentives taxpayers we have to bear taxes, because up to now taxpayers have not been paying taxes. For example, on construction materials imported, they have been paying a flat tax rate of 5%, but now this has been increased to 25%. And these are the questions people are asking about the affordability of the accommodation. There is a problem of accommodation in Rwanda, and now construction materials taxes are going to increase.
The 2013-2014 resource allocation took into account the Economic Development Poverty Reduction Strategy 2 priorities that are critical to Rwanda's long-term goal of attaining middle-income status by 2020. The thematic areas have been allocated 50% of the total budget, with 37% allotted to foundation issues such as health and education in the Economic Development Poverty Reduction Strategy 1, as well as 13% to support functions.
This year's budget, or 2013-2014, which is about 1.65 trillion Rwandan francs, is really half of it, 50%, is going to EDPRS2 within those four components, where the economic transformation is taking lion's share, 28%, and the rural development 10%, the productivity and skills development is taking 10%, and the 2% are for accountable governance. Now, the other component is that 37% of the total budget is committed to what we call foundational issues. Those foundational areas are the areas that have been achieved within the EDPRS1. The areas of basic health, basic education, the health. We have areas that are very crucial, especially for sustaining, I would say, quality foundation of the whole entire economy, which are very, very critical for us. The peace, the security, and other areas which are very, very crucial.
In health and in education, we have done tremendously well. We have almost, and I understand that most of our villages that we committed to do, almost most of them are on the right track, and I hope that by 2015, everything will be okay. But also in agriculture, we've done a lot.
Government plans to ensure that the country also achieves affordable energy as well as develop basic infrastructure to facilitate trade and accelerate agricultural production in order to achieve economic sustainability.
These are indicators that are very, very crucial, that are very helpful. It means that you are taking care of the security, you are taking care of the corruption areas, which are the governance areas, but also you are improving in terms of competitiveness. And also by investing in skills, we're also contributing to that kind of competitiveness. That's what is helping us to be able to grow the economy at the rate of 8.2% for the last 10 years. And now we are targeting to have an average of economic growth of 11.5%. But at the same time, we are looking at the poverty reduction levels, which is also going to give us an edge. And that's why we believe that we should have a growth, but also it should be an inclusive growth that is helping an ordinary people.
One of the key strategies this fiscal year is resource allocation towards productivity and youth employment. 13.9 billion Rwanda francs has been allocated to the training and vocational training schools, infrastructure development and equipment project.
We feel that if we take a number of people from agriculture activities towards the off-farm activities, that would make a change. And that's why we want to develop skills to the youth, so that they are able to develop other activities out of the farming activities. That's why you have heard that we have given a lot of money into the TVETs. How do you call it? The vocational training centers. We want the people in the low areas to be given some skills in the various areas that can help them to earn some earnings.
Here we are also looking at the skills that are needed by the economy in most of the areas, so many trades, and focusing on the TVET, technical and vocational training, focusing on entrepreneurship, focusing on employment, especially for the youth. And this is what is going to also help the youth to create jobs and also increase the employment. And also focusing on jobs that are outside agriculture in the rural sectors. And that's why we think this one is going to be very important.